It's time for the Gold Show. Jonathan Rose, CEO, President of the Capital Gold Group, and Precious Metals Investment Strategist is with us today. Good to talk with you again.
Well, it's a pleasure to be here, and it's a pleasure to welcome our listeners today and educate them on the importance of having a balanced portfolio that does include precious metals, particularly gold and other assets such as silver that you physically get to hold on to. So whether you have a 401k from a previous employer or an IRA, we're going to show you on today's show how you can protect that with solid gold, and also how you can take delivery of gold and the importance of having gold in today's economic economy.
Jonathan, we've got a lot to talk about, including the news about Chrysler seeking Chapter 11 bankruptcy and what that may mean. But before we do that, I would like to encourage everyone listening to get a hold of the Capital Gold Group's special guide that they have, the Gold Guide. It's freshly updated for 2009. This is a wealth of information. It is an $80 value. It comes with a CD, tells you all you need to know about gold. And if you're going to call right now, you're going to get it not for $80, but you're going to get it set out for free, right?
Absolutely. The listeners get it for free just by calling us toll-free at 800-510-9594. Again, that number, folks, is 800-510-9594. It's normally $80. The listeners get it for free. It comes with a great DVD. It's an education on gold, how to own gold, and really how to protect yourselves in these turbulent times. And again, if you want that information, you want that education, you can call us right now at 800-510-9594, and they can also see us online at www.safeasgold.com and safeasgold.us. All
right, and on today's show, we'll talk about the flight to safety and why people are turning to gold and precious metals to really balance out their portfolio, and why especially right now. But before we do, let's look at some of the headlines. Chrysler, the announcement that Chrysler going into Chapter 11 bankruptcy, a pillar. One of those companies been around for years. Obviously, it had problems before. But this is huge news that tells us what? That the economy is not getting better yet.
No, in fact, the little snippets of news I'm hearing where people are saying, good news, it looks like the recession is coming to an end. Well, I think that's a little bit far-fetched in my opinion. I don't think the recession is coming to an end. I'd like it to end tomorrow and everything be rosy and everybody making money in all different sectors, but that's just not a reality. And obviously, the writing has been on the wall with Chrysler, but it's really just another notch on the belt of these big heavyweight companies that are either, being needed to be bowed out or really just evaporating and not even downsizing, just disappearing. Companies that have been around for 50, 60, even 100 years, unfortunately, haven't been able to weather the storm, and they've just disappeared off of the face of the map, and I really don't think it's going to be the last big company that's going to be disappearing this year.
And in the meantime, it's eligible for more infusion of cash, which, of course, are U.S. tax dollars. Jonathan, if you look at the stimulus package, over $700 billion and all that's being put into the different things to shore up the banks, there is a lot of money being pumped into the economy. And one of the things that we should explore is what that does when you put that kind of money generated out of thin air, printed up by the government, money that has to be paid back by the taxpayers. There's a history. This has happened before in other countries, and the wise individual looks at that history, don't they?
Absolutely, and with all this extra money being pumped into the economy, what it really means is that people should be concerned about rampant inflation. And inflation is when consumer goods become more expensive year after year, and the dollars that can purchase those goods, well, they're able to purchase less in terms of services out there. And it's a very scary scenario, and that's one of the reasons why I love gold, because it's in fact one of the very few assets out there that has actually kept pace with inflation over the past 200 years. Mutual funds have not, stocks have not, but gold has been really a storage of wealth. It's really been a flight to safety and security. And I was reading an interesting article just really about inflation, because the United States Bureau of Labor and Statistics, they actually have an inflation calculator on their website. And what it does is it allows you to enter an amount of money and a previous year, and then it tells you how much money you would need to have just to match the same buying power. So, for example, I went on there, I put in the year 1918 to the calculator just to see, what would come out. So if you had $25 back then, well, today you would need $64.54 just to purchase the same goods and services. And in fact, I typed in $5,000, and it came back to me and says, well, you would need $12,907 just to buy the same purchasing power as it would back then. So, inflation is very insidious. You don't actually see it, but it's there. And with all this extra government spending, stimulus bills, whether it's, monies for the war, bailout money for banks and automakers, it's really a concern that's got a lot of people worried that inflation could creep in. And when that happens, gold has been really rising. And in fact, if we were to adjust for inflation today, back in 1980, gold hit a peak of $850. So I typed in the inflation calculator, $850, and it came back and it said, well, today that would come back as $2,194. So that's why I've said on many previous shows, if we adjusted for inflation, gold should already be at $2,400 an ounce. And an article to do with inflation, people are asking, well, why isn't gold already at $2,400 an ounce? And the general consensus that people are saying out there, and I know people don't like to hear conspiracy theories, but that's what they think is going on. Gold is being manipulated. It's extremely undervalued, in my opinion, and that's what makes it a very strong buying opportunity, and that's where the smart money is going.
Well, we're going to share the number for folks to get the gold guide in a second, and if you'd like to get started or add to your portfolio today, that number also works because there are experts standing by who can help you through the maze of choices. We'll talk about some of those choices. But before we give out the number, what are the experts saying? What are the predictions out there for gold? What are some of the people who really know gold well saying right now?
Well, a lot of Wall Street pundits or companies like Citigroup, Merrill Lynch, they've been predicting gold to finish up about $1,200 to $1,500 an ounce by the end of this year, and anywhere from $3,000 to $4,000 an ounce in the next, 3 to 5 years. I think they're very realistic numbers, especially with gold being undervalued. And I look at gold like a big iceberg in Antarctica. You see these huge ice caps, and they look absolutely huge. But then if you look underneath the water level, well, they're 10 times bigger, and they're rising. And gold is kind of like one of those, those cooking pots, one of those steamers, and I think it's really being artificially kept down, and it could be a matter of weeks, it could be a matter of months before the lid just literally blows off, and we could see gold go on a very strong rally past $1,500 an ounce to all new time highs.
So now is actually an excellent time to get in.
Well, I think so, because I'm looking at gold spot prices today. It's about $893. It's been hovering around that the past few weeks, and I'm a big believer gold below $900 an ounce for bullion is a strong buying opportunity. But remember, there are different types of gold products out there. So whether you're looking for gold bullion, whether you're looking for the older gold coins that are non-confiscatable, non-reportable, they don't trade on the gold price. They're actually more expensive than regular gold, sometimes double the price of what you'd find on gold bullion, but they have privacy advantages to them, and it's really a double play advantage, because people who purchase the older gold coins, not only are they getting the content of the gold, but they're also really getting a piece of history. It has an intrinsic value to it. And don't forget, there's only so much gold out there. Once it's gone, whether it's regular bullion, whether it's older gold coins. So now a supply and demand issue comes into effect, and again, these are just one of the many facets of reasons why gold is going to continue to rise, in my opinion, over the next 5 to 7 years.
Jonathan Rose is with us from the Capital Gold Group. Jonathan, I want to share the number, have you share it right now to get the gold guide. It's an $80 value. You're going to get it free when you call right now. But also, if you'd like to make an investment, if you'd like to transition some of those dollars that are slipping away and put them into gold, and if you're tired of just taking it when the 401ks, and if you're just tired of these investments that just stay so low, what's the number they can call? Well,
they can call right now. It's toll-free. It's 800-510-9594. Again, it's 800-510-9594.